Welcome to CEO Money. I'm Michael Yorba. I've got Kunal Desai, founder and CEO, Bulls on Wall Street and Bulls on Crypto Street, on the show with us today. All right, Kunal, I know you've been tearing it up on the markets with you and your clients watching this stuff. Bitcoin and Ethereum had some big moves. What's up with that?
You know what? The market has been in a standstill for about 6 months. Bitcoin's really been sitting around the same range for, it would be since June. It's been sitting around at this 6,000, and it's been propping up. It's been going to 6,400, back down to 62. Sometimes it gets to 65, 66. But there's just been no action, no movement in cryptocurrencies at all. Obviously, 2017 was the year of a bubble, right? And bubble has burst. And, money just has not flown back into cryptocurrency. And what looked like was happening was maybe a floor was building at 6,000. But the problem with floors are, like when you're building a base on any stock or a coin, is that when you test a level just too many times, essentially you're soaking up and weakening that level. So, Bitcoin has come down and tested that 6,000 level over and over and over since summertime. And when you think about like trading, and you think about support and resistance, you keep hitting a level, it's like beating down a door. And you know what? If you beat down on a door of plywood over and over for months, at some point you're just exploding right through it. And that's what's happened with Bitcoin today. It's just blown through that 6,000, which has sent the rest of the market in a tailspin. And now everything is down about 15% off the board. And this could be starting a new downtrend in cryptocurrency, as it had looked like things had been stabilized and relaxing for a bit. But now the bottom's dropped off, and where it stops, nobody knows, because this is kind of stuff is really unprecedented, right? I mean, cryptocurrency is new, and, the only parallels we can use is maybe the tech bubble of 2000, right? Which was, it took a long time to digest that. I mean, was it the end of the world, the tech bubble? No, great companies came out of it, but for a couple years, it was really, really bleak, and that's what it's looking like for cryptocurrency right now. I'm short Bitcoin, and I'm short Ethereum, which is the second largest cryptocurrency after Bitcoin, and both of these have just, at this point, we don't know where the bottom is. Like, nobody will be able to tell us.
What I find really weird about this Bitcoin, I've been trading for over 30 years, and when I see a round number, my spidey senses are all up, and 5,300 exactly makes me wonder what's really going on behind there.
Yeah.
Okay. ETC. You're going to stay short on this right now?
Yeah.
For the near. Okay.
Yeah.
Okay. What else? What other markets? Pacific.
So look, the stock market right now is in the dumpster too.
Yeah.
We're not helping ourselves with, there's a lot of uncertainty going on. So there's two things that's an overhang on the market that can be fixed, but the overhang is not really releasing itself. Number one is rising interest rates. Even though they're still historically low, they're not low for what's been the last decade, right? Mm-hmm. As we got used to 0%, and we got used to 1%. People didn't like 2%, but now as they're creeping up, people are getting jitterish. U.S. companies for a long time, right, are borrowing at 0%, 1%, buying back their stock, right, fueling up more of a bull run. These interest rates are rising, and frankly, it's got a jitter on the market. When you couple that with this China trade stuff, which is kind of BS anyways. That's like the biggest hogwash of news I've ever heard. Trade war with China. China doesn't have anywhere to sell their stuff if we don't buy it, right? But there's an overhang there. Like, they can't use Google and Facebook over there, but we have to buy their $1 t-shirts. It never makes any sense, right? But just the fact that we want to have fair trade somehow has spooked the market. And when you couple that with rising interest rates, things are all over the place, and there's just volatility because there's an uncertainty. And then with the Democrats winning the House, We know that at least for the next, year or two, politically, in the beginning, they're going to put some heat on the Trumpster. They've been raring to go, right? You got Maxine Waters, of all people, right? She's going to be the chairman of the finance committee. When is the last time? Why do we have 90-year-old politicians want to be chairman of banks and stuff like that? It always just boggles my mind, right? But here we go. And so this is adding some pressure to the market. So these kind of overhangs got to kind of remove themselves at some point or resolve themselves. And they will. It just happens to be, the way that the Trumpster does. His politics and business is different than what people have done in the past, right? And so negotiation is like that, especially when you're dealing with a hard-headed, adversary like the Chinese who don't like to lose face and they don't like to give in either, even though it's in their best interest, right, for fair trade. They're not going to do it at first, right? And so everybody's kind of pinned into different stuff. And then, frankly, the rising interest rates is kind of spooking everybody. And when you have a big bull run, it just takes a little kindle, right? A little spark to kind of get people to sell off and say, you know what, we're going to kind of look at our portfolios in a different manner. And they're taking risk off the table is essentially what's happening. So you're seeing high beta names really get really smoked out. And there's just a flight to safety. People are running into bonds and dumping stocks.
And gold.
Yeah.
All right. Now, here's the thing that comes to my mind. This is, now that we've got a trend established, especially after what happened today, this has got to make your job just a little bit easier because all you have to do is sell it into resistance.
Yeah.
On a rally.
Right now, we have to treat things as just guilty till proven innocent. And I'm always a long-term bull on the U.S. and the U.S. economy. But yeah, for short term, things are looking a little bit different. We may have a little bit of ways to go. But the mother of all short squeezes can start as soon as kind of these overhangs are taken off the markets. And really, if you look at really the last 10, 20 years, when the market dips down like this, 10, 20%, it never lasts more than a month or two. That's just the nature of how trends work. If you look at the chart of, the U.S. stock market over the last 100 years, it's straight up. And so in the end, that's how it works. But yeah, for a month or two, things can look really, really nasty. So you got to protect your risk, right? Hedge your bets. And, trade on the short side when you can, at least on a short-term basis, while you're looking for longer-term entries. And, like companies like Apple and stuff are just getting smoked out right now. And it's creating such amazing sell pressure because hedge funds in the last couple years, they've really been all holed up in the same few names. For a while, it was FANG stocks and things like that. They hold up in the same few names. So when a few things start to blow up, then, everybody's just running out the door. And when people are so concentrated in a handful of big trillion-dollar names, the market can unwind really, really quickly.
I agree with you. And speaking of that, this Pacific Gas and Electric, symbol PCG, this thing just got hammered. Were you able to catch any of that thing?
Yeah, so I've actually I shorted that in my Bulls on Wall Street chat room today at $28. I wrote it down to about 25, 24. I left some money on the table, but ended up being a good short. So these guys are the utility company in California that's centered around the forest fires, as we know. It's a terrible situation over there. And, some news leaked out yesterday or last night that, these guys had seen some sparks on some of their lines the day before, the fires. And they tried to kind of solve it all really quietly and not give anybody a heads up. And as you know, it hasn't really, I go to California, Tom, it hasn't been raining there the last few years. It's just dry as all hell over there. And, one guy throwing out it's a crazy state because a guy throws out a cigarette butt out of his window. Next thing you know, you could burn down 100,000 acres, right? And so, obviously there's a longer term thing there that probably needs to be fixed, but these guys really got themselves in some trouble there. And when that news came out and their stock had already been getting pummeled, things are adding, there's a lot more pressure coming on. you don't know where their liability is right now. So, I'm shorting this thing into pops intraday, into pops into resistance, and I'll ride this thing down for a while, but only on the day trading side now, because when something drops like this, it just takes one piece of news, right, to kind of start the short squeeze.
What about this natural gas? I haven't seen these kind of spikes in commodities, starting with natural gas, in a really long time. Something's up there. What's your opinion?
Something's up there. So oil does move around. So, oil obviously crashed a couple years ago, and it ramped up back to $80 this year on the strength of a hugely strong global economy. But natural gas itself has not moved at all. Now, there's not much news out there on what's happening because this is an artificial kind of price increase. Natural gas in general, like if it goes up, right, it might move 1% or 2%, right? But you don't see moves of like 20% daily in a commodity. I mean, very rare. Not in today's day, maybe, 20, 30 years ago when there's just, and it's a different world. But in today's day, you don't see in a global commodity where there's also a glut of supply, or has been for years, you don't see 20% moves. So, I mean, just talking to people on the street and talking with some friends of mine that are big traders, they're hearing some, hedge funds have blown up, shorting natural gas, and it's causing the mother of all squeezes. But that's just conjecture. The price action is just insane. It's got parabolic, and I mean, that's what I trade off is the technicals.
Right, me too. I'm on the same page with you. Wow. So how's the trading been going?
The trading has been good. Volatile markets create opportunity, but it also makes it harder. Day traders love to say they love volatility. That's not really true. We'd rather the market just go up a little bit every single day because, you don't have to watch it as much, and you can, right, momentum just takes over. This type of volatility where you get the market, like the Dow gapped up 200 points today, and it faded off the whole gain, and it's down 200 points. That type of volatility makes it so that your time horizons have to be hours instead of days. I mean, you can't fade 400 points off a early morning push without being really, really nimble. So it's been fun because it's volatile and it's creating good opportunities, but your focus and your risk management have to be just so much better because the biggest pops in the market also happen in bear market type trading.
Yep, they do. Hey, how does somebody get into one of your rooms so they can watch you and trade along with you?
I'm trading live on bullsonwallstreet.com every single day. I'm on screen share, and I got my trading platform up, and I'm literally walking my students through exactly what I see through my eyes and calling out my plays in real time so they can see what I'm buying and selling, and they can follow along and also just learn.
God, you've done a great job. I want to commend you, and I really enjoyed when I popped in your room every so often. I appreciate it.
Hey, thank you.
You got it. I'll be seeing you soon.
All right, take care, sir.
All right, thanks. You've been watching CEO Money with Michael Yorba. Thanks for joining with us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.